Welcome back everyone. In this video we talk about how to make 10K a month trading. I'm going through some steps and things I've learned from experience, how I do it. I don't make 10K every month in my accounts, that's just more, that's just a little bit less. Actually the average is maybe a little bit higher. But we'll talk about how to actually make that income level with trading. So don't get too far in this video, you need to understand a few basic things first before we go to strategies. I'll talk about mindset, risk management. Then we'll go on the chart and share all about the strategy behind how I make 10K a month in trading. So stick around, watch this till the end. I think it'll be useful. And we'll dive right in. So unless you understand a few key basic things first, it's going to be very hard to make money trading and make 10K a month with trading. You got to understand the mindset first. Otherwise, you might be just gambling and trying to strategy jump every week and try different things, and it's not going to work well. So we need to be able to understand these things first. The first thing when it comes to mindset is I don't see myself as a trader that much. I see myself as a strategy manager. So I create strategies that work in the market. They have an edge in some kind of scenarios. And then I just let them run and I trade these strategies over time. And my job is not just to take trades, it's actually to monitor these strategies over time. See how they perform, see what the stats are like, see what's working well, what's not working well, how can I adjust it. So I'm much more like a project manager than just a trader. I'm there to manage strategies, not just place trades. And placing trades might be just like a thing I do for 10 minutes per day. But then the rest of the work is all about looking at how these strategies could be improved over time. If you just copy the strategies and take trades, you could be making money for a while, but it's not going to be as long as if you really master these strategies and understand how they work and you really work on them a lot after that. The second thing is I adopt a probability mindset, meaning that any single trade I take, I know could be a loser. I don't really worry about, oh, this trade needs to work out. I need to be making money on this one. This one has to be a good one. This one is a really cool setup. It should be working out. That's not how I think about things. I think about things about, oh, it could work, it could not work. There's a chance it will work. And maybe my win rate historically is about 68%. And I know on some trades I'll make money, on some I won't make money, but anyone could be a loser. And I just kind of go in the market with the expectation that I'll take the trade, I'll follow the plan, and things will work out or they might not work out. But I know long-term this strategy I trade has an edge, and that's kind of all that matters. Most people don't come in with that mindset in the market. They come in with a, I need to make money now kind of mindset. Not with a mindset of being willing to let things play out long term. And that's why a lot of people lose money, I think. Third thing that's really important here is I let my trades run as much as possible. So I'm not going to be there to like micromanage them or like change stop losses all the time or change their profits or whatever or close them early. But I have really defined rules on when to manage my trades. And these happen only like once a day I check the chart. If the criteria are met, I'll close the trades early. Or if I need to move a stop loss, I'll move it there. But I'm never going to be micromanaging trades or changing things too fast or acting out of emotions. These are very defined rules that I follow all the time. And there's very specific scenarios where I manage my trades. But outside of that, I just let it run. And I just kind of want to go away. I base myself on the fact that my trading should be hands-off as much as possible. I should not be there to spend all my day at the charts or spend all my days worrying about trades. I should be enjoying the day, traveling, doing cool stuff, and then my trading run on the side of that. All right, I know what you think now. You want to go to strategies and the charts, and we'll get there in a second here. It's going to be very quick. But I want to talk about risk management first. And I want to let you know that if you want to have a free training where I go through my strategies in detail, I'll cover it here in a minute. But if you want to go into more details, go a lot beyond, know all the rules or the details, maybe even get a checklist, I have a free course. It's going to be linked below. You can check it out. It's called my Bonjour Universal Strategy. So it's one of the two strategies I use. I'll teach it to you for free. You can check out the link below. The first link will be to get that course 100% free. I'm not selling anything there. You can learn all the stuff for free. And you can, of course, get a lot of value that way. So check it out, link below. We'll get to the chart in a minute here. But let me cover risk management first. Very key, important point here. I really believe that the only way to grow an account long term, meaning if you want to make 10K a month consistently, not just like 1 month, then you blow up the next month, we don't want to have that happen. The only way to do it consistently is if you use low risk. You cannot be high risk, risking 10% per trade, 20% per trade, hoping to make 100% a month. That stuff will not work to make 10K a month. It will work to maybe make some money quick, then maybe you lose it all. But I want to do it consistently, which means the only way to do it is with low risk. I never risk more than 1% per trade, but also I want to be able to minimize my drawdowns. Drawdowns are what will kill most traders because they will actually have a good strategy, maybe have a good edge, but because they put too much risk on it, then they end up losing the account, or they end up even like losing 20 or 30%. And that means it's really hard to get back on track after if you lose that big of a chunk in your account. Could I go and risk 2 or 3%? Yeah, probably. Like my win rate is pretty good. But for me, I prefer to have a lower drawdown. Maybe under 10% is what I'm looking for. Not ever lose more than 10% of my account. And I'm willing to make a little bit less money because I know I'll add more capital eventually to the account. So it's going to go from like now it's maybe 300K, maybe in the future it's going to be 500K, then a million eventually. So I know by adding more capital, I can increase my returns as opposed to adding risk to the account. So I take less risk than I could take, but I'm happy because I don't have big drawdowns on my account. And that's one of the cool things if you want to do this consistently, is that if you don't lose a lot, you can maintain it long term. All right, now the important part, the part you all want to hear about, is a strategy. So let's dive into it. First, I'm going to pick up a whiteboard here and teach you a few things about the strategy I trade. Now, first thing I want to say is I have two strategies. Okay, my writing is bad here because I'm using an iPad and it's on stand. First one, it's called BBR, so Bonjour Reversal. And I'm going to win any prize for writing here. It's going to be very messy. This one I have a free course on, so you can just check out the link below. It's going to teach you the strategy's details. It's basically looking for reversals, so it works pretty well with Forex. Because Forex doesn't trend that much. It's mostly sideways, most of the pair these days. Even if some are trending, intraday is very sideways sometimes. So that strategy works super well in Forex. You can basically trade it, go back and forth between ranges. It works super well. So check out the link below for that. It's going to be explaining details there. Second one I use is a whole moving average strategy. So it's a pullback strategy. Looking for pullback that whole moving average, which the setting depends on what you want to trade exactly. You want to trade like fast trends or short trends. You want to trade like more sideways market. It will depend there. So the settings change, but the key is we want to follow the whole moving average. And I've done a video on this in the past. You can check it out over here in the corner. It's also going to be a link below if you want to check it out in details. I have a free course to teach you all about the whole moving average. This one over here. So I'll try to leave it linked below if I don't forget. If I forget, let me know. I'll add the link back or put in the comments somewhere. That is a training on the whole moving average. So it's free. Again, I've done this a few months back. A lot of people have signed up for it, and I think it's pretty useful. So check it out. It's also pretty good to understand how the strategy works. Now, when it comes to the strategies I trade, first it needs to be adapted to my personality. So I really adapt these. I put some more rules that fit my personality, fit how I like to trade. I manage my trades the way I like to do it. I will use stop loss the way I like to do it. So it might not work 100% for you. That's why you have to tweak some things sometimes. You have to make it your own, because the thing you'll see here is really fitting me and not everyone else out there. It's really made for me to trade. And honestly, my stuff is super simple. Like, it's very, very basic. I think it works quite well. The edge is there for sure. So let's go on the chart and show you how that works out. I'll show you an example here on gold that we had last week on the whole moving average. Actually, this is like 2 weeks past, but I keep my trades. I trade daily charts, so my trades kind of last a long time. Here we have a very, very nice setup. So I have a few of these in the past that I've taken. I'll guide you to one here for now. The whole is green, meaning we are in an uptrend. This is, by the way, this is based on a 50 period here. It's based on a daily chart, but I could also move this on the weekly chart. So as it works better on different time frames. But basically what I look for is I look for price to be below the whole when it's green. So meaning that it's a good area to buy. If price is at the top here, just example. If you are green and price is at the top over here, that means it's a bad place to buy because we're like going up, yes, but we're too high. We're like not in a good value area. If we go here below the whole, this is a good value area. We go up in an uptrend, we're in a good area to buy. Same thing here, we go below the whole, it's still green. Good place to buy. Now I have a second whole moving average here at the bottom, which is a longer period moving average, which gives me a good idea of like what's the long-term trend in the market. Are we going to keep trending or are we going to kind of go sideways? You can look at the chart for this if you want to. Like, it's very clear now we are in an uptrend, so that gives you a good clue. But I actually have the second confirmation here, giving me the longer-term trend. I think that might be a 200 period or maybe a little bit less to give me a good idea of the trend in this kind of market. Okay, so now what we do is we look for basically an engulfing candle. We have one here, good setup. Entry above the high, stop loss below the low of this engulfing candle. And target here is a 3-to-1 and 1-to-1. So what I do is I have two targets. One is 1-to-1. One will be 2-to-1 or 3-to-1 depending on the strategy I trade. So Bonjour Reversal will be different. Hall is 3-to-1. So I catch the long-term trend and have some rules to manage my trades. First rule is if the Hall turns back to red, I want to get out. Right? So if you're over here, the Hall turns to red, we want to get out. If you're going back here again, at a long-term trade, Hall's turn to red, I get out. This one might have been triggered before. Actually, 1-to-1's triggered, then the Hall turns red, I get out of the trade. Right? That's pretty simple. Now, it might give me a small loss, might give me a small profit, doesn't matter. I get out when it's turning red. Now, in this case, you have a 3-to-1 take profit. So 1-to-1 was pretty fastly achieved. 3-to-1 is still running. So I believe now we had a big move at 2.75 to 1, 2.71 to 1, roughly. So that's kind of what we're looking for here. So this is how that all works. Very simple setup, like a very easy pace. I trade this on daily charts and weekly charts on my account, and it makes me some pretty good money. I like weekly charts a lot in stocks and ETFs as well, so indices sometimes. These give you a really good entry. Now you won't see the setup here because it's not just set for this time frame, But basically we have an engulfing candle right over here. Okay, that's when I entered. I'm not logged into my account here, so I cannot show you all the details of trades, but when you have engulfing candle, I would enter, I would go long, then I would try to get out. When the whole turns red, so over here, for example, then I would maybe enter again over here. We have another engulfing candle. I'll get out when it turns red here. That's kind of how it works. So that's kind of the principle behind this. Now, this is really good for trends, but when it comes to sideways market, especially in Forex, you have a lot of them. That's kind of where it gets a bit tricky. When it comes to sideways market, like we have over here in Forex, I use a different strategy, which is called the Bollinger Universal strategy. Now, I've done a full course on this. You can check it out in the link below. It's free. But how this works is we look for bounce of the Bollinger Band. So here we have an example. Price is bouncing out of the Bollinger Band. We have this engulfing candle over here. On my custom indicator here, the blue triangle shows me this setup on the chart. What I look for in this case is I look for a break of the Bollinger Band. So we see here we have one candlestick breaking the low. Then the next one here also breaks the low. And what we do is we want to enter is also engulfing. So it's closing above the previous candlestick high. So that's good for us. We want to be entering just above the high over here. Okay, if it's triggered next candlestick, we take the trade. Here it's triggered. Stop loss goes below the low. And target in this case is 1-to-1. Again, short take profit to be able to capture the first move. And the second one is at 2-to-1. So we have two different take profits. Here we go. Long here and below over here. And then we target 1-to-1. By the way, stop loss is to be below the low of the previous candlestick, right? The lowest low. So if it's the low over here, you put it over here. That way we're not going to get stopped out by the next trade. So that was the case. And in this case, it was really tight, but we did manage to get it. And then 1-to-1 and 2-to-1. So 2-to-1 is right over here. It's targeting sideways market, so it's a lot smaller targets. It's not going to be as big and as wide. We're not going to look for trends. We're only going to look for sideways market in this case. So that's an example of one. Now, you want to be able to trade this also based on either the trend if you want to. So you buy when it's a bullish trend, you sell when it's a bearish trend. Example here, we're not going to go buy here, right? Because, for example, we have the Halloween average here, the longer term trend, telling us it's a sell here. It's a downtrend, right? Here, when you go there, it's a buy. It's green, so we can actually go and buy this market. So you want to trade this with the trend, or you can trade this also with any kind of like support resistance areas. You can do this too. Now, there's a very good rule here that you have to follow. If you don't close above the high next candlestick, we want to avoid the trade. So this example over here, we have our setup in this candlestick right there, okay? And then you see price doesn't even go beyond the high. So we don't have any continuation on that move. We always place our order above the high of the previous candlestick. So here's not triggered. We don't take that trade. We cancel it over here. We will not take that trade because we don't go beyond the high of the candlestick. I explained this a lot more in details in the course I've put below, so you can check it out. Sign up for this. It's free, 100% free. I got to see all the rules and details and how that works out. And hopefully you can catch it back there. So I've shared here how I can make 10K a month. And my results back it up. I'll put some proof of you on here on the screen. Check out that course if you want to learn more. And I'll catch you back there right now. Ciao.